Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Hey, welcome back, entrepreneurs. Today, I have the pleasure of interviewing Shawna Weckerling, founder of taxgoddess.com, who is here today to give you your tax blueprint for commercial real estate success. We'll talk about some amazing tax tips for real estate investors and beyond, because I know we have a lot of entrepreneurs that have multiple enterprises. And we're going to have some great tips for entrepreneurs founding their first business. So I'm going to show you one of your own business, which beautiful book. We're going to delve into great detail in a moment. But for now, I just want to say it's her first book, but also her latest book, because we have a new edition coming out, and that's great. You know, not every book makes it to a second edition, and that's really, really cool. It's a sign of success. So I would say, hey, let's just dive right into it. And with that, we'll welcome you to the show, Shawna.
Aw, thank you so much for having me. I always love being here with you because you always ask the best, most detailed questions. So I'm super excited to be here with you.
I do my best, but I also know who to have on the show, the guests that have the best, most detailed answers. So, I mean, despite that rather medium to long-sized introduction, a lot of things I didn't mention, and so we're going to talk about that too as well. But I did read the Kindle version, so I don't have that to hold up, like the starting your own business.
Oh, you got to at least have it on the desk.
She's got it. Yes, every author has to have.
It's got to be on the desk.
At arm's length, and that's good. Well, how about this? Since you just held that up, why don't we start with the 6% Life, my mistake. I don't know what I'm thinking of.
Your title's good. I could write another book.
Never mind. Arcane reference. But yeah, love the book. So you don't just tell people how to do it. You spell out the pitfalls that you can fall into if you don't implement the strategies correctly. Because again, I mean, we're talking about something that's, you know, it's very important. It's potentially very helpful, but at the same time, whoa, you know, don't try this at home. It can be very dangerous. So having somebody trained on your side is very valuable. So
and I think that's a part of the reason why I wanted to cover the pitfalls, because, you know, I always call it the TikTok effect, right? You know, you're on YouTube, you're on TikTok, you're reading an article in the Wall Street Journal, like wherever it is that you're gaining your tax information. And I put air quotes around that for a very specific reason, because, you know, these even the articles in the Wall Street Journal can only go so in depth, right? I mean, it's not the 67,000 pages of tax code on top of which you have all the experience. So it was really important for me to get the pitfalls into the book, because these are the things that we see most commonly messed up, right? Where, you know, somebody told you the story, but not the whole story, or you did everything right, but you failed to file that one form, or you filed the form, but you forgot to check the one checkbox, and now the IRS is all upset about something. So we really wanted to make sure that for the strategies that, you know, we kind of consider these are the basic these are the basic strategies everybody should be using, right? If you are having problems with those, even getting to the more complex things are going to be difficult for you. So yes, of course, you can always use a professional, or you can read the 67,000 pages and take 25 years to get there. So whatever makes you happy, you know.
Well, I love it. Yeah, another great feature I didn't mention yet is your additional resources. So whereas, yes, you try to make sure everybody has the basics, you cover some of the more advanced material at the right level of detail, but people who are really excited, I mean, I don't know, maybe some mutants out there that just really want to go in there. And I know, you know, I'm kidding.
Love tax. Some people love tax, you know.
It's good. Yeah. And what I'm really trying to say, though, is that you have a way of making it fun, because taxation, it's something that, you know, I mean, obviously nobody on this call, but some people consider, you know, boring, but definitely your way of presenting the material is making it fun. So yeah, you make it fun and easygoing. So let's see. I don't know where to go next. I always love the heartwarming stories, because I feel like that's really what makes entrepreneurship rewarding. I mean, we're here. I mean, we're for the money. If it wasn't for the money, you know, we would be golfing or doing something else. But it's not just all about the money. And I think what really keeps us going is knowing that we're out there solving real problems and helping people. So you have a heartwarming story about a mom you helped. And I know you know who I'm talking about. If
Oh,
you
I
wouldn't mind
do. I
sharing that story
do.
with us. Uh,
Absolutely. Yeah. So you're right, 100%. I often myself, I believe that I'm kind of somewhat a psychologist, certainly not trained in that area, but we hear because it relates to money, because what we do relates to money. We hear all the stories. We hear the husbands and the wives and the divorces and the sick kids and I mean, we hear all of it. And so I love being able to do the heartwarming stories because those are the dreams that we get to make come true. And so in this particular case, the one you're discussing, we had a client come to us, a small business. She makes jewelry. Actually, I'm wearing some of her jewelry. I just adore her stuff. Makes jewelry. And at the time, this was way back when, at the time, she was working out of her home. She had like a desk in the corner of a bedroom. She was doing jewelry at night, right? Her business was really starting to take off. She was exploding on Etsy, all of these kinds of things. And so she's actually in real estate. She does real estate on the side on top of her business. And between the two, she was making ends meet, started to really blow up, started to make a lot of money, started to get really concerned, right? What do I do? How do I do this? How do I reduce my taxes? Make sure I'm still legal above board. So we went through, wrote an entire tax plan for her, an STC, strategic tax coaching plan, wrote this plan out for her. I was so excited to deliver her plan. And on the day that it was to deliver her plan, she came into my office. I had her big book. It was all spiral bound, ready to go. She came into my office and her eyes were red, puffy. Like, I mean, when somebody's been crying for a bit, something's
oh
really
yeah.
wrong, right? And she came in and I looked at her, are you okay? What's going on? She said, I just found out my son has cancer and it's going to be a major surgery. And it's a lot of just overwhelm, just massive overwhelm, right? And the very long story short, obviously, we didn't go way into depth on her tax plan because she was not focused on that. I flipped to the results page and I said, listen, here's the deal. You've got this surgery. It's going to cost this kind of money. You don't have it. If you do the plan, if you follow these 7 steps, you will have the cash to pay for your son's cancer surgery. And she just, I'm even now just telling the story, I'm getting goosebumps. Jumped up and hugs and whatever, more tears and good tears this time. But so those are the types of things that I love being able to do. And hopefully, knock on whatever wood you can find, nobody else has cancer surgery that needs paid for, but making people's lives easier by providing the cash for them to do what they want to do. What is your dream, right? Is it to expand your business? Is it to put into retirement? Is it to, heaven forbid, pay for cancer surgery? What is it that you need that cash can help solve? And so I love being able to do those kinds of things and deliver those kinds of plans to be able to make dreams a reality. So
Yeah. Beautiful. I love it. And I used to ask the question, can you sort of send us out with a heartwarming story of someone you helped through entrepreneurship? And I stopped asking the question because so few people are really ready to answer it, but you tax goddess are.
aw.
So I did mention you have a very endearing way of making what could otherwise be an intimidating and difficult topic fun. So your job, as I understand it, is keeping people out of the level 9 or the Al Capone zone. And
Yes.
and then I think you also list 0 as a kitten purring on your lap, and 10 is a lion. Woo. Okay, 8 is completely legal. So you
Yes.
help people find all these great solutions up to level 8, whatever's totally legal, and finding a way to make sure that it's done right, like you said. I mean, omitting a form, forgetting a checkbox.
These
Wow.
can create
Those things can
significant
have some serious
problems.
consequences.
Yeah, exactly. Well, and you take something even as simple, like, for example, one of the good, basic, solid tax strategies, level 0, like everyone should do it if you meet the qualifications to do it, is converting to an S corporation. Okay. So, you've got an LLC, you start your business, you're an LLC, you're making some money. Okay. If you're under about $50,000 worth of profit, stay in LLC, which is taxed as generally a Schedule C on your personal return. Okay. But once you start making more than $50,000 worth of profit, the first strategy that you generally look at is, okay, should I convert to an S corp? there's a 2-page form, 2 pages, okay? I have seen that 2-page form messed up in about 8 different ways. This box not checked, that box not checked, this paragraph not filled out, that name not there. And I mean, if you can imagine, listeners, right? The IRS doesn't care what you meant to do. They care what box you checked and what name you put on what row and what signature on what line. So I have seen horror stories where somebody who didn't quite know what they were doing, they were trying, right? Maybe a CPA, maybe somebody trying to help you, an entity formation person, something like that, submits the form. You go along preparing your tax returns as an S corporation, thinking everything's good. When the IRS finally gets to your paperwork, typically 3 years later, right? This is wrong, your S election is blown, you owe us all this tax, and you owe us this, and you did this, right? So sometimes the simple idea to have somebody actually double check, somebody who specializes in it to double check what you're about to submit, takes somebody like me 5 minutes to go, yep, great, send it, right? Might be a really good idea. So even on basic strategies, even on the kitten purring in your lap strategies, so.
Yeah, yeah, that's a huge one too, because I've got one which we had to start out as an S corp because, well, we're doing big business. So it's yeah, residential construction. I mean, even every home we've sold has been well upwards of $500,000.
A little bit over the 50,000.
Yeah, closer now to 3/4, and I think we haven't already. Certainly exceed that soon. So corp election, it's huge. I mean, who wants to have to pay all of those employment taxes? I mean, you're an entrepreneur for a reason. I mean, you understand it's feast or famine, and we're all investors already on this show. We should be. If you're not, call me up. I'll get you hooked up.
Hook up.
But probably a perfect segue, because the next question I wanted to ask you was about IRAs and saving money for retirement.
Yeah.
Business owners, we have opportunities that you don't really have with a W-2. I know you can just sock away tons of money with a business if your business is generating a lot of revenue, if you do it right. So how do you do it right?
And I love when a question is simplistic, because there's always about 500 ways to skin the cat. So a lot of that question depends on, one, how much money do you want to put in? And two, what do you want to use the money for? So for example, and I'm going to go with question 2 here first. If you already have a really large real estate portfolio outside of your retirement funds, but you have nothing in stocks, you may want to consider diversifying. Not more real estate. You might want to do some treasuries and some stocks and go buy NVIDIA. Today was the 10-to-1 split, like these kinds of things, right? So you may want to diversify. If you want to diversify, you don't need super complex plans, because there's really like levels to plans. There's your basic plan where you put money in, you can invest in the stock market. There's a medium level plan where you put money in, you can invest in stock market, maybe you can do some options trading, so still very much related to stocks, bonds, that kind of thing, okay, mutual funds. And then you have the advanced level plans that are typically called self-directed. Self-directed plans allow you to invest in, air quotes, almost anything. So if you are very heavy in a stock portfolio, but you have a huge 401k that you want to roll into an IRA and go invest in real estate because you want to build out the other side of your portfolio, you can do that. Now, when it comes to the different types of plans, so you can have just your regular IRA, you can have a SEP, you can have a simple, you can have a 401k plan, you can have profit sharing portions and matching portions, you can have cash balance plans. There's something like 50 different types of ways for you to put money away. Some of them aren't even qualified plans at all, looking at more things like insurance programs like infinite banking or premium financing. So we really start all discussions with, what do you want to do with the money and how much money are you looking to put away? Because if it's $5,000 a year, stick with your IRA, you're good. If it's $500,000 a year, you're going to need some of the more complex plans. So really just depends on how much you have.
Yeah, good news. So I hope people are taking notes out there. If you're starting a business, you already have a business, there are definitely, huge options You don't know unless you ask. Yeah, I did a lot of research on that, but I still haven't figured out how to put away $500,000 a year. That's
Well, it does
working
kind of
on that.
depend on your age as well, but we
Yeah.
can take a whole nother like hour and just deep dive on that one too. So,
All right.
you know,
Okay.
what
Okay.
one of the things that I think a lot of people miss, especially entrepreneurs, is that when you think about retirement, it's not just you. A lot of us have been trained like my 401k or my IRA, right? You also have your spouse, which in many cases will double the amount you can put in, right? You also have your children. Okay, so if you're following some of the basic strategies in the 6% Life book, one of them is to add your kids to payroll. Okay, if your kids have money in retirement, it is their retirement for sure. But their retirement can go buy life insurance that you can get a loan on. Their retirement can go buy a property that can now raise money for them for college in the future, right? You don't need your money to pay for their college in the future. So you can put your money into your retirement, right? So a lot of these strategies will actually interact with each other and combine, almost like 1 + 1 = 4 instead of 1 + 1 = 2.
Yes,
So
that's the investing equation.
yes, exactly. So, and it works in tax as well, right? When you layer strategy upon strategy upon strategy, the title of the book is The 6% Life. Our average tax rate for our clients is 6.92%. Our clients typically come to us taking home $1 million or more. So when you're looking at $1 million a year of income paying 6.92% tax, it's a pretty good tax rate, but you got to do the work. So
Yeah, awesome, awesome. And well, let's see. Here's like another couple of things that people may not have done the work on. Like for 1031 exchanges, that's I think pretty well known. But then you also talk about some other approaches like and there's all these acronyms. I swear there's at least three
it,
different things named
easy.
DST, Deferred Sales Trust here. You
Yeah.
listed.
So yeah, so let's talk about it. So a 1031, just to lay the baseline for anybody that doesn't know what that is, a 1031 is you're changing one thing for something else that is like kind. And so it's called often a like kind exchange. Now, back January 1st of 2018, the IRS put in a rule that says you can only use a 1031 real estate to real estate. So if you own a commercial building and you want to go to 3 residential rentals, that's fine, but it's got to be real estate to real estate. Now, you're right, there's a ton of acronyms and tax code numbers that speak about all the other options. So we have a 721, which is going from real estate to a REIT. So if you no longer want to actively manage, but you want to stay in real estate as a portfolio, that's an option. If you want to get out of real estate completely or anything else from that matter, like selling a business, selling your classic car collection, selling some really big stock portfolio, maybe you have that really big position in NVIDIA, right? And you want to get out of it while the market's hot. You can use either DST or sometimes they're called installment trust. So deferred sales trust, installment trust. There's some variations within that category as to which one you're using and what's going on. At this point, so it's funny, the tax laws change. The book, The 6% Life, just came out last year. We're now, the DST is kind of secondary. Now we're on installment trust is the better option. So things move all the time. Craziness. There you go. You also have, if you're charitable minded, you also have CRAT, PLAT, CRUT, CRT, like everything starts with a C and ends with a T, basically means charitable something, something, something trust, right? And, so if you're charitable in mind, but you want to keep assets for your heirs, you can go that route as well. So a lot of which strategy you use is based on one, how big the gain is, right? So if you have $1,000 gain on your stocks, you don't want to use any of these strategies. They're all expensive for that. But if you have $1 million gain on selling your business or a $5 million gain selling your piece of commercial property, you want to be looking at these, right? So, yeah.
Yeah, amazing. And you can do that, like you mentioned, 721 to go from real estate to REIT. You really just you can save money on just about any sort of a transaction, like even selling a business, etc.
Yeah.
But I don't know if we have time to go into all of that because I want to make sure we get to all the other good stuff. And I actually started by saying we're going to talk about starting your own business, which is a great book. And I think we'll probably just break that in the second half of the interview. So, oh, here's another one, accountable plans. So you can actually get some more take-home pay by excluding some reimbursed expenses. How do you do this?
100%. So this is probably the most missed strategy in literally almost every client we've ever seen. I think we've done over 4,700 clients. I think I've seen 2 that actually had this in place and were using it properly when they came to us. Okay. Now, on the aggression scale, we talked about kitten purring all the way up to Al Capone and lions. Okay. So this is a -4, -4, meaning if it's not being done, your CPA just flat out missed it. You definitely want to look at this. So if you're a business owner, if you're an entrepreneur, if you're an investor, whatever, if you have not heard the term accountable plan right now, pause this, go call your accountant, okay, and find out if they're doing an accountable plan. Because I'll give you the perfect example. In this case, we had the most famous case we had a professional speaker who came to us. Now, with professional speakers, they are effectively actors on stage, right? They have to present well, they have to speak well, their voice, their hair, their nails, like all these things have to look good because it's a part of what they do as a part of their presentation, right? If you went to a conference and some guy walked up on stage and his shirt was untucked and his shoe was flapping and all these things, right? Like that would be a problem. You wouldn't trust the person. Okay. So her CPA had originally told her that things like her home office, her clothing, her hair, her nails, all of these people or all of these items were not expenses for her business. Right. A little scary because under an accountable plan, what you're looking for in your own business is ordinary, necessary, and reasonable. So for her as a professional speaker, she always used to wear this blue jacket, right? For her, that jacket was ordinary, necessary, and reasonable. It was a part of her image. It's what she needed to be on stage. Ordinary, necessary, and reasonable absolutely is a deduction. And she got to take all of those reimbursements. We went back 3 years. We found $190,000 per year that her CPA was not allowing her to deduct, that because of her position, because of her business, because of what she did, was ordinary, necessary, and reasonable, and we got to deduct them all under the accountable plan. So if you don't have one of these, go get one now, right now. Okay.
Yeah, a couple quick questions for you there. So something like Steve Jobs 100 black turtlenecks, is that something that would qualify?
And I love it only because it's Steve Jobs. And why am I saying this? Because when you say
it's his image, right?
It's his image. It's a specific personal brand. Here's the image, right? But what we see more commonly here is things like, for example, on your way into work, you bought donuts for your crew. You use your personal card because you're thinking it's a personal thing, whatever. It's not. The donuts were to improve the culture of your team, right? The culture and sugar performance for 2 hours of your team or whatever, okay? Often things like your home office, your cell phone, these things, everybody knows they're a deduction, but if you don't have an accountable plan, the IRS can take that deduction away. Those are only deductions if you have an accountable plan. So if you're in construction, okay, and you built a showroom out of your backyard so that you can show your clients, hey, here's the grass we can use, here's the boulders we can use for the pool, here's the pergola we can make, right? If you build a showroom, that's an accountable plan expense, even though it's on your personal property. So everything ties back to what do you do as a professional, right? Unfortunately, CPAs were allowed to look like slobs. So I don't get any hair, nails, any of the rest of it. But, it's absolutely dependent on ordinary, necessary, and reasonable for what you do. And if you don't, the accountable plan, guys, is a 1-page document, one page. If your CPA and you don't have a copy of that 1 page on file and the IRS comes to ask you about it, all of those deductions are gone. Poof, gone. So it's super important.
I get out in front of people for this podcast. I mean, is my personal trainer, could that be?
Love it. So here's the deal. And I'm gonna pick on you right now, just a little bit. Okay. If you had a facial trainer, because at the moment I can only see your face. Right? I see your head.
Okay. Yeah.
I love it. But yeah, so guys, you have to be very cautious. It's got to be something that, like, for example, people won't trust you, George, if your jawline doesn't look good. I don't know. Think about a news anchor. Okay, again, they can't show up on screen. They can't look like slobs. I mean, it just, they would lose their job. And so really that's maybe the best way to test it. Would you lose your job? Would you lose clients? Would you lose trust? And you can prove it that you would lose trust, not just I think I would lose trust, like prove that somebody wrote a testimonial saying, oh, he looked like a slob and so I wasn't going to interview with him. Okay, so, you know, it gets a little funny, and how far you want to push it certainly starts moving up that aggression scale, right? You start getting closer to Al Capone. But if you can prove that it's ordinary, necessary, and reasonable, you're good.
Great. Okay, so until I get that modeling gig, I think I will I'll hold on that. But
I might leave that one.
good to know. All right. Okay. So also infinite banking concept. We talked about that a couple times on this show with some different guests, but it would be great. I think if we could get a super fast, well, not super fast. It is complicated, but a brief rundown on what that is and how that might help you.
Absolutely. So infinite banking and premium financing, those two always go together for me. Okay. The thought is this. Now, everybody, I'm gonna preface this right now. I am a tax goddess. Okay. You do not see licensed insurance initials in my name. Okay. CPA, MTax, everything is about tax. Okay. I do not sell insurance. Okay. I look at everything in the world as a tool for tax purposes. Okay. So infinite banking, premium financing, what these things are a tool that use a base of life insurance to be able to give you access to your money so that you can, most important tax verbiage, so that you can double dip on your money. Now, I love double dipping on my money, right? Who doesn't want to double dip on your cash? Like this is a good thing. So what happens from our perspective, with infinite banking, premium financing, you put money into an insurance policy. Okay, you own it, you control it, all the things. Okay, you put money into an insurance policy. Typically, with infinite banking, it's about a year and a day. With premium financing, it can be up to 15 years that you don't have access to the money. So a lot of people will use this as their kind of midterm emergency fund, right? Like you don't want to put your $5,000 of like, oh shoot, my air conditioning just broke into that because you don't have access for a year and a day typically. But after that time period has passed, you now have access to that money for absolutely any purpose. Okay, well, Shawna, it sounds normal. It sounds like me putting money into a bank account, except for the fact that if you take money out of the insurance policy value continues to grow, even though you borrowed the money. And if you borrow the money from yourself, not having to go to Bank of America or Wells Fargo or whatever, your loan requirements are whatever you say they are. So in 3 days, you have a check to go buy your next piece of real estate, right? To go put a down payment on a home. You have now double dipped on your money because inside the insurance policy, it's growing and you're getting tax-free wealth forever for the rest of your life, and your heirs get tax-free wealth. So like really hard to argue with tax-free for you, tax-free for your heirs, tax-free all the way around. And you get to double dip on the cash. It's not trapped. You can go use it to expand your business, buy a property, invest in a partnership, you know, whatever it is that you want to do. So I love infinite banking. Premium financing, like I said, it's got about a 15-year, anywhere between a 10 and 15-year lockup. So that's really good for the long-term savings, right? So for retirement type options, love me some premium financing because of course you can also use leverage. So if you have a good set of net worth and you want to double it, premium financing is a great way to go. So.
Okay. All right. Well, that is just awesome. And you know what? I understand you've got a new app coming out. I don't know if it's the App Store yet, but should be there soon. Cash Goblin. Can you tell us what does that app do for you?
I am so excited. I can't wait for it to release live. Yeah, so what the app does, if anybody has heard of something called Profit First Accounting. So the very long story short, you know, you make your $1,000, just your income, whatever your income is, you make your $1,000. Most people will make their $1,000, spend whatever money they're going to spend. So you spend $800 and you have $200 of profit left over. Well, the profit first accounting methods flips that on its head. And it says, okay, I make $1,000. I am deciding as an owner that all of my blood, sweat, tears, all the hard work that I have to do comes first. And if I don't take home at least 20%, I'm going to go get a W-2. I'm going to switch business. Like I'm going to go do something else. Okay. And so what Cash Goblin does, many people have within their own bank the ability to set up like automated transfers, right? Because with Profit First, you say, okay, I bring in my $1,000. I demand as an owner 20%. So I'm going to move my $200 to a completely separate bank account, out of sight, out of mind, right? To build up my savings, build up my emergency fund, have cash to pay taxes, have cash to buy real estate property, like whatever it is, right? And whatever's left over is what I'm going to pay bills with. So many banks have that option within their own bank, right? But for a lot of people, if they see the bank account, not everybody's amazing with money, right? If they see the bank account and they see this huge chunk of cash, they might spend it, they might do something with it. So what Cash Goblin does, and I just have to show you because he is absolutely adorable, the little goblin guy.
Love
He's
it.
super
Yes.
cute.
Yeah. Always have a way of making these difficult things personable. Budgeting. Oh, that's not
Oh.
easy to make that.
Well, and my hope is, really my goal with Cash Goblins. So because I like saving people money, I like them to be able to do what they want to do, right? To be able to meet their dream. Well, if your dream is to take your family on a $25,000 trip to Disneyland, if your dream is to save for retirement, if your dream is to buy a yacht, whatever your dream is, right? Cash Goblin automates the money transfers and the savings and puts it into out of sight, out of mind bank accounts. So it's still yours, you still own it, it's all your cash. But because it's out of sight, you are a lot less tempted psychologically to spend the money, or, well, my business just needs a little extra 500 bucks. I'm going to pull it from savings. No, you're not. That's not the money of the business, right? So really, really excited about it. We think it's really going to help people like Profit First people, FIRE, the financial independent retire early people that tithe, to churches, this kind of thing, right? 10% automatic. I'm actually really excited about helping people get out of debt, because for a lot of people, they're not, they got into debt, something happened, either a medical debt or they're just not so good with money, whatever. By setting up even 1% going to a savings account, out of sight, out of mind, now you're creating a pile of money to go do a snowball, pay off that first debt, save some more money, pay off the second debt, that kind of thing. So I'm very excited about it. I think it'll be really awesome. And I can't wait for it to go live in the App Store. So.
Yeah, beautiful. Just read The Richest Man in Babylon, read Profit First as well. These are time-tested ideas by entrepreneurs. Well, the great thing, though, is that if I understand correctly, I mean, you don't need 10 different bank accounts to do all that. It's trying to use technology to get to the same solution.
100%. 100%. Yeah, if you really want to manage 10 bank accounts, I suppose you could, but even I don't want to do that. I'm an accountant. So use technology to your advantage and make it automated. So it's like the set it and forget it. If you remember the guy from the 80s, set it and forget it with the cook, right? Just cook your little chicken or whatever and be happy. And now you have savings. And for many people, because they never had a system that was easy to use, right? If you had to log into your bank and make transfers every day, you're never going to do it. The little Cash Goblins run around in the background and they do all that work for you, and it's just done. So.
Love it. Yes. Love it. Love it. Love it. Yeah. Just like a little thinking about the old concept of the homunculus.
And there you go. Yes. He's cuter than a homunculus, I do have to say, but all the good bits.
Yes, without a doubt. The old textbook designers should have got better artists to design those homunculi, because that was a fun little concept. Didn't really stand the test of time in science, but in human imagination, they're going to live forever.
Yes.
All right. Well, anyway, it looks like, what an amazing interview. I got to say, look, we talked a lot about the 6% life, and we did talk about a lot of things that are very important to entrepreneurs. But I do think, gosh, if you would be willing to come on back, I'd really love to talk to you in depth about starting your own business. Hopefully by then, who knows, we might even have the new edition out. I'm just holding up the old edition over there. I think it would be, everybody's best interest. Let's really dive deep into that. So I want to thank you for talking about 6% life. That's a life you deserve to be living. And with that, I think we'll just wrap. Now, I've asked you my standard questions. So now I think what we're going to do is we're going to wrap with some just higher level questions. Like, total all right, some total expert level questions to get to know you better. So I know you're totally unflappable. You're going to do just great. But I want to ask you, all right, so when was the last time you tried something for the first time?
Oh, the last time I tried something for the first time, actually probably just this weekend. I love gardening. Not really a professional thing, sorry, but I love gardening. And I went to go tour a worm farm that they have here in Arizona. And one of the coolest things that I saw there was they used milk crates in the ground by each of their fruit trees, and they would put all their compost in there, and the worms would just flock, which of course makes the trees healthy. So Mother Nature's little helpers. So this weekend I spent, geez, probably about 16 hours digging holes using a power hammer with a what is it called? I don't even know what kind of bit it is. A power hammer with a big shovel bit on the front to dig through Arizona hard rock dirt and put in milk crates for compost. So yes, all the things about learning something new. I do honestly believe that it keeps your brain young and happy and healthy to learn new things. So I was thrilled.
So milk crates full of earthworms.
Yeah, so the thought is you put the
Yeah.
you put the milk crate in, right? And then you
Yeah.
put some compost, and then you buy or bring earthworms, and they eat the compost and they multiply, and it makes all
Wow.
your soil much more healthy. So we're gonna check it out and see how that goes.
It sounds delicious. I'm just joking. I'm sure that it's going to make some wonderful. I mean, every farmer knows. I mean, that's
Worms produce the black gold. This is good stuff. We have on property here, I have about 58 fruit trees. So
All right.
I'm really hoping they juice up my peaches. That would make me very happy.
Good. That's great. That's great. So I want to ask you, particularly you, because I think you're somebody who just really sees and gets it that it's not just all about money. So what does true success look like for you?
Oh, I mean, my immediate two answers came to my head. The first one is doing what you love, and not what you say you love, but literally you're smiling the entire time you're doing it, even when it's hard, because you love it, right? So, and then of course, being able to wake up with a smile, knowing you're about to go do whatever it is that you love. So for me, that's the definition of success.
Beautiful. All right. And what is the most important part of your routine?
Oh, this is going to be so silly. Probably morning puppy tummy rubs. I have 5 dogs, 2 German Shepherds, 2 boxer mixes, and a Great Dane Cane Corso mix. And probably the most important day of me being happy and being satisfied in life is every morning they kind of roll over, and I try my best with 2 hands to rub 5 tummies. It's probably the most important part of my routine.
Beautiful. And okay, now, since you're an animal lover, I have to ask you, if you could have a wild animal for a pet, what would it be?
Oh, a wild animal. And I can't count my current 5. They're pretty wild. A wild animal. Probably an owl. I would probably go with an owl. Because I have basically a farm here, right? I have rabbits and quail and all these kinds of things. That also means, unfortunately, I have some mice and some rats. And so I think an owl would be an excellent addition to the crew.
All right, I like it. A very wise choice. So I think with that, I think we'll definitely have to wrap, and just want to make sure everybody is able to reach out to the tax goddess. So if you're out there wondering, oh gosh, I wonder if this is for me, can I save tens of thousands, maybe even hundreds of $1,000s
Oh yeah.
by calling Shawna? How do we do that?
Super easy to find, taxgoddess.com. You'll reach out to my team, set an appointment. We'll look through your documents, come back with an analysis of how much we can save, and go from there. So.
All right, beautiful. Well, thank you so much for taking your time to share your knowledge and experience with our audience. Okay, so next time we're going to talk about starting your own business. Thank you so much.
Sounds like a plan.
All right.